Mm-hmm. Well, hello there. Welcome to Trading Psychology. I'm your host, Dr. Bearish Bully, or as I like to call myself, Double B. Tell me something. Have you guys ever experienced this before?
Oh my gosh, the stock is on fire. Buy, 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 buy.
And it always goes down when I get in.
Why does it always go up once I get up?
Why does God hate me?
I thought you might have. Don't worry. I have no idea what the fuck is in here anyways. So, let's get into this because there are many things people need to understand about day trading and investing, and it is not a joke. So let's see the things we are going to be covering today in this video. All right, we are going to be discussing emotional trading, fear and greed, of course, hopeful trading, FOMO trading, revenge trading, and gambling. All right, so let's start off with emotional trading. All right, now when it comes down to emotional trading, basically you're trading with fear or greed. So trading with fear and selling too quickly when you make a little bit because you are afraid it might not go up more. So you miss out on some real gains. Or it could be not cutting your losses quick enough because you can't accept the fact that you just lost money. So now you feel you lost too much and can't get out now. Now you start thinking that, oh, God hates you, or your account is being watched, and you start thinking that whenever I get out, it'll probably go up. Or as long as I'm still in, it'll keep going down. Guys, you cannot let emotions take over your trading. So the best way to avoid this is to set a goal, okay? Trade with a goal. Set a limit to how much you are looking to make, and set a limit to how much you can afford to lose if things aren't going your way. Don't let greed take over. Just because a stock is having a massive run up doesn't mean it won't come crashing down. So be smart about your trades and investments. Do not let your emotions take over. Remember, the stock market does not care about you or your money. You're not being watched. This has nothing to do with God hating you or loving you or you being a favorite child. It's nothing like that. There is no emotions when it comes to the stock market. So trade with what works. All right, next on the block we have hopeful trading. Now this is when people are hoping that a stock will go up, or when they're down on a stock and they're bag holding because they hope it will go up. You cannot hope when it comes to trading. Hope is not a measure of how to invest or trade in the stock market. Do your research. See why a stock should go up based on fundamentals or news catalysts that make sense. Even when they have news catalysts, look for levels of support and resistance so you know key levels to look out for when it's going up or when it's going down. Based on your due diligence, you will have an idea of how much profit you'll make based on the move, and see if that falls in line with the limit you have set for your gains. Also make sure to see how much downside risk is possible and see if that lines up with the limit set to the amount of loss you are comfortable with accepting. Trade based on things that matter. Hope is not something that should matter in the stock market. All right, next on the list is FOMO trading, fear of missing out. Now, this is because everybody starts thinking that there will not be another opportunity like this one. You know, and this will actually end up causing you to take every trade that comes along, because you're going to think that there's not going to be another one that's just like this. And it can cause you to increase your position size, because now you're going to think this one's going to go to the moon, and you stop thinking about what can happen if it doesn't go your way. GME, for example, everybody knows that because of how recent it was. And yes, a lot of people did make money on it, but a lot of people did lose money on it, and people aren't really looking at those accounts. So you have to be careful not to start thinking about FOMO trading, fear of missing out. A lot of times people will say or ask me, should I sell? Everybody's telling me to hold or buy more. And this actually leads them to being down a lot of capital, and they keep holding it because other people are telling them that it's about to rocket. You cannot trade like this, all right? First of all, there will always be another trade just like the last one. And the goal should not be to look for parabolic stocks, because these are not normal or healthy trades, and they can usually end up being extremely risky. Here's an example. BPTH, or Biopath. That one rocketed up so high. Everybody thought, you know what, there isn't going to be another one just like this. Nano Dimensions. It went from like 30 cents or 26 cents up to, I think it was $17. Bio Nanogenomics. These ones were another penny stock, rocketed all the way up to the teens. Workhorse. I remember when this one was trading as low as $2 and change, ended up going all the way up to about $47. Bitcoin, everybody knows Bitcoin. Bitcoin started off from less than a penny and rocketed up. Now I think it's over 60,000. Tesla. I mean, everybody knows Tesla, right? So these are just a few of them to discuss, but there's always going to be another trade. But even with massive runners like this, always do your research so you don't get burned. All right, so fear of missing out should not apply when it comes to the stock market. Yes, it can work in your favor, but it can also destroy your account. So leave the fear of missing out. Okay, revenge trading. So this is what happens when you're losing money and you start trading even more because you feel like you have to make it back. This happens to everyone, including myself. You lost money and you don't want to end the day red, so you go looking for other stocks to make your money back. But this may not work well every single time. It may work out sometimes, but not every time, and it could actually put you even deeper in the red. So what you need to do, once you have lost the limit that you already set for the day, stop trading. Turn off your computer, walk away, take a break, clear your mind, and later on you can start preparing for the next trading day. There's no sense of saying that you lost, for example, $500. Oh man, you know what? It's okay. I think something else is running. I have to make it back. I can't end this day red. Guys, you have to accept the fact that when you're trading, you will have losses and you will have gains. But the most important thing is controlling it. That's why it's important to set goals. You set a limit, you set a goal, and you stick to it. This way you will still end up being successful in the long run. You may have taken a red day for the day, but you still have 4 more days left in the week. Don't ruin all of them by having a few green days and then having a massive loss. Just trade smart. The last and, well, you know what, to be honest, they're all pretty important, but this one is for, I guess, the people who really don't understand investing or trading. And this is gambling. trading is like gambling. To be honest, this cannot be farther from the truth. Trading is not the same as gambling unless you make it that way. Okay, so now trading can be like gambling if you're just rolling the dice, betting on black because, hey, guess what? It went on red 5 times. Out of 10, it should be going on black the next 5. That's not how it works. All right, 50-50 is based on every single time. So if I roll the dice now, or if I roll the dice now, there's a 50-50 chance that it's gonna be on one number or the other number, even though there's 6 numbers, so that's a pretty bad way to call it. But either way, probability is not 50-50 when it comes to investing. When you're coming to investing or when you're doing your day trades, you should trade based on patterns. You should trade based on fundamentals. You should trade based on catalysts. You should trade based on volume. You should trade based on all of these things put together. It's never one or the other. Do not make trading or investing a gamble, because you will lose, and you will lose big. So take these different scenarios, make sure you are cautious with your trades, make sure you do your research, and don't trade based on hype. Don't trade based on what you're hearing in group chats. Trade because you see something and it makes sense to you. If it doesn't make sense, it will not make you money. So take this into consideration. Really focus on this, and I can guarantee you, you will be a more successful trader if you can master these steps. All right. If you guys found anything useful out of this video, please hit the like button, subscribe, join the team. If you guys have any questions or any comments, please go ahead and leave it in the comment section down below. I hope you guys all have a green week ahead, and I will see you in the next one.